Guys, this is Rudy coming to you live from Palm Beach in Florida. It is Monday. It is October the 17th. Over the past weekend, I took a little bit of a snapshot of my 10 largest positions. I'm going to share this with you in two different videos. So 10 of my largest positions, 5 of them in energy, which is not all the energy stocks I hold, and then the other 5 in a mixed bag of financials and industrials and so on. But what I want to do with this particular sort of series, this two-part series, is provide you with a snapshot of why I am invested in certain stocks and kind of give you a little bit of a flavor as to why I am in these positions at all. So the first thing I'm going to do is go through 5 of my largest energy positions. Now, many of these are spoken about many times before, so I'm going to skip and gloss over some of the details as applicable. But in a nutshell, I'm talking about 5 different stocks, except 4 of them are basic directly owned equities, and the other one is an ETF. So I'm going to come back to that one in a minute, and we'll go through each of them very briefly, and I'll tell you sort of why I'm invested in these and what it is that I'm doing with these particular stocks. So the first one for me is Petrobras. At the top of the screen, you can see it's an ADR, which means an American Depository Receipt. In other words, I don't actually hold the stock, I hold a note, which is provided to me by the stock exchange locally in the United States, and it's called an American Depository Receipt. I get 1 ADR for every share of Petrobras. Right at the bottom of the market of the screen, you can see Petrobras is an emerging markets integrated oil company. More about that one in just a second. The second one, obviously by now, for those of you who call me Mr. Oxy, you'd be very familiar with, is Occidental Petroleum. Right at the bottom of the screen, once again, a U.S. oil integrated company in the US. Enbridge is a Canadian corporation. Once again, oil production and pipeline. Energy Transfer is once again a US corporation. Right at the bottom of the screen, oil gas product pipeline. And this one is also unique or different, much like Petrobras' emerging markets. Energy Transfer is an MLP. MLP means a master limited partnership. Some of you have asked me for tax implications related to the K1 form that a master limited partnership issues to the limited partners, in other words, moi. Effectively, the answer to that as a US tax person is that a K1 form is almost identical, not in terms of its design and layout, but in terms of the tax treatment. It's almost exactly the same as receiving a 1099 for work that you have done, or W-2 if you're a full-time employee. Basically, what you do is when you file your taxes, you either give it to your accountant who adds it to your income, or otherwise, if you're using online tax preparation software, you enter the K1 information pretty much just like almost paint by number, right? They ask you questions, you look at the K1 form where the applicable box is on the form, and you just enter the details, and the tax preparation software will calculate the taxes for you. It's no big deal getting a K1. I understand many people have an issue with receiving multiple tax forms. If you're an investor, you're probably receiving a variety of 1099 forms anyway if you're a US investor. So adding a couple of K1s is not that serious a challenge. XLE on the far right is an ETF. So it's different to the others, whereas I have direct ownership in Petrobras, Occidental, Enbridge, and Energy Transfer. I own XLE, which is an ETF. An ETF is an exchange traded fund. So let's take a look at some of these in just a little bit more detail while we compare one with the other. Now, I've added a couple of green arrows here just to kind of make it easier to follow along. And I'm highlighting certain things for you, which could be good or bad, depending on what the actual stock is that we're talking about. So right in the middle of the screen, Enbridge, you can see it has a 20-day raw stochastic score of 15. Now, as a general rule for people who follow the technicals, if the stochastic is 80 or greater, the stock is effectively very overbought. Now, in the case of Enbridge, it is so low that effectively it's the opposite of what I just said. It has been oversold. One of the reasons why it has been oversold is over the past few months or so. And by the way, these snapshots that I'm showing you come from last Friday, so it doesn't take into consideration the fantastic day on the markets today, October 17th. For people who are long in some of these stocks, you would have had a great day today, the same way you had a rotten week last week. One of the reasons, right in the middle of the screen at the bottom, you can see that the sentiment on Enbridge has been largely negative. And one of the reasons for that is simply that in Canada, there is a huge sort of element of animosity against fossil fuel companies from the government, which is based in Ottawa, in Ontario, in Canada, towards Alberta, the Western provinces. There's a lot of conflict, a lot of this stuff going on. That's one of the reasons why. So it's a little bit political, and for what it's worth, energy is probably 90% political and 10% supply and demand, not the other way around. Petrobras, on the other hand, has moved from about a month ago, leading up to the Brazilian elections, from a 16% buy now to a 56% buy. And what I look when I compare stocks or equities like these is I look for outliers. Where are the odd ones out? So Petrobras, for instance, would be an odd one out, where the sentiment changed from a month ago, 16% buy to now 56% buy, or Enbridge, where a month ago was 72% sell and now it's 100% sell. I look for reasons why this is the case and see if I can build a narrative or an investment thesis around some of these things that I learn as I do my own due diligence, which is what you should do too. Now, other things we can look at over here is the performance of the stock. I'm not going to look at 1 day, 5 days, etc. I'm just looking right at the bottom at 6 months. And you can see that we have one outlier here. That's Occidental, up 12% over the last 6 months, while everything else in terms of the other four that I'm showing you has been mostly negative, except for these two guys, Energy Transfer and XLE, have been pretty much flat over the last 6 months. Now, year to date, they're actually up quite a bit. But one of the reasons, obviously, for this outlier here, Occidental Petroleum, was Berkshire Hathaway's continual buying of the stock. And then, of course, the other outlier is Enbridge, which is mostly negative. It's now trading so low, it's looking like it's a buy again. But you need to do your due diligence, and you need to make those decisions. What I'm doing on this slide here is I'm making a comparison, seeing if there's a particular motivating factor for me to potentially open a position in any of these stocks. Now, if you look at the numbers and the arrows that I've added here to this particular slide, so in the case of Petrobras, 12%, what does that mean? So effectively what I'm doing is I'm looking at the market capitalization, which is on the top line under the key statistics over here, and then I'm taking the annual sales and I'm dividing the annual sales into the market cap of the company to give me an indication of how the company's book value looks on paper in terms of sales versus market cap. Now, I highlighted a couple of them here for you in green, and Petrobras is 12% and Energy Transfer 53%. This is an actual very interesting comparison here, because in the case of Energy Transfer, you have a company that generates $67 billion in sales, that's billion with a B, and has a market cap of only 36 billion. Conversely, you have a company like Occidental Petroleum that generates $26 billion in revenue approximately, and has a market cap now, thanks mainly to Berkshire Hathaway, of $63 billion. So you can see there's a huge delta between the sales and the market cap of Occidental and Enbridge, whereas the reverse is true for Petrobras and for Energy Transfer. In the case of XLE, that's not applicable because it's an ETF, so it doesn't have sales that I can track. A quick slide here just to show you a snapshot. If you've been long with me on Oxy, you're probably smiling, right? You should still be smiling. And I have one loser over here down at the bottom is Enbridge. Take into consideration as well, with the exception of Occidental, all these other guys down here, even XLE, the ETF, which pays a dividend of almost 4%, you can add that to the actual return of the equity. So if I take my worst performing equity on this particular slide, right at the bottom on the right-hand corner is Enbridge at 13% negative, but Enbridge pays a dividend of over 6% on an annualized basis. So even though I'm down 13%, in real terms, I'm actually only down about 6 or 7% in what was a declining market. More about Enbridge in just a second. A quick snapshot here, and then I'm going to close off this presentation on the top 5 energy stocks, and I'll make a new video on my other two top 5 holdings. By the way, let me just pause here for a second. I do have other energy stocks as well. So I have some small cap stocks. And then for those of you who've been following me, you'll know that I also have some uranium stocks. Though the uranium stocks for sure have mostly done quite okay. So on this particular video, I'm actually just sharing my largest positions as opposed to all my energy positions with you. But when I say largest, I'm talking about institutional level investing. In other words, I have a lot of my personal cash parked in these particular equities, So they are very near and dear to me and important to me in terms of my personal wealth management. You can buy Petrobras. As I said, I took these snapshots on Friday last week, which was a rotten week, and today is a great day. So I'm not even sure sort of what the comparison is on a case by case basis. But anyway, Petrobras is about $14. It's trading just right to the left of the 52-week high, which was about $16. So there's a little bit of run rate there. Right now, I can confidently tell you that Petrobras is one of the cheapest super majors you can buy. And just for what it's worth, for context, Occidental Petroleum produces just over a million, approximately 1.2 million barrels of oil equivalent per day. Petrobras does about 2.5 million per day. So from a production point of view, 2 times the size. I think one of the major challenges with Petrobras is the political interference as a state-owned company, and probably too many politicians have their hands in the cookie jar, which pulls the stock back down again and makes it less profitable than it should be based on its production and the current prices of energy, which is high and probably will go even higher as we go into winter. A PE ratio of 3 times, it's super cheap. It's ridiculously cheap. It's almost free. And an indication of that right at the bottom in the middle of the screen is a short interest of only 2.72. Let's take a look at Occidental quickly. Obviously, I have a large position in Occidental. You can buy it at around $66. I'm not buying Occidental at 60 anything. The lowest entry point I have is actually $58 per share. And that was just a small little tranche that I bought with some extra cash. And I didn't know where to put it, so I put it into Occidental. May as well have put it into XLE. But anyway, I added a little bit of Occidental a few weeks back when Occidental pulled back to under $60 per share. Much like my example of Petrobras, it's also just sitting slightly left of its 52-week high, which is $77 per share. So it's got about $11 there to make up before it gets back to 77 again. The PE ratio is 6. In other words, it's still cheap. Even at the current price at $66, it's still cheap. But I have so much of it, I'm not adding any more right now. Now, here's Enbridge, right? So this is the proverbial elephant in the room. At a glance, the PE ratio at around 20 is too high, right? I want to get into a new position when the PE ratio is around 15 or so. So based on that, you could arguably say that Enbridge should pull back to around 28, 29, maybe $30 before you jump into Enbridge. However, there are reasons why Enbridge is actually, relatively speaking, a buy. And remember, you need to do your own due diligence. I'm just sharing information with you. There are a few reasons for that. Firstly, unlike the other two I just showed you, Enbridge is sitting way to the left here, very close to its 52-week low of $35.02, currently trading at around $36. It was down 3% on Friday. I think it's up about 3% today. I'm not exactly sure, but that doesn't really matter. So the PE becomes maybe a little bit less meaningful here in terms of Enbridge. What I do want to share with you as well on Enbridge is an integrated Canadian oil producer with pipelines, but very importantly for me, because I've been in Enbridge for a long, long time. So even when Enbridge pulls back like it has, I'm still in the money because I've been in the position so long with reinvested dividends. It almost, figuratively speaking, doesn't really matter if it pulls back. When it pulls back a lot, I actually just buy some more. But one of the reasons why I like Enbridge is because more than a third of Canada's population, approximately, live in the province of Ontario. And in Ontario, Enbridge is also the utility, which provides them with natural gas for heating and cooling. Now, for those of you who might not be familiar, summers in Canada, for instance, in a city like Toronto in Canada, summers can be just as hot and humid as what it can be in Palm Beach in Florida. Now, it may not last for 3 months. It might last for 3 days, but when the heat goes up and the humidity goes up, you run your AC. But of course, conversely, on the other side of the ledger, winter sometimes seems to last for like 9 months in a place like Toronto, Canada. And when it's cold, you heat your home. Both the heating and cooling is natural gas, and Enbridge is the utility that provides and supplies that natural gas. That means most Canadians are paying Enbridge a monthly check. So at least 1/3 of Canadians are sending Enbridge a monthly check for heating or cooling. So there's this ongoing recurring revenue that makes Enbridge a very good proposition, and at the same time, for long-term investors who have Enbridge as a foundational stock, you are socking away a large dividend. My average dividend on this stock is probably closer to 10 based on my cost basis, but not bad currently based on the existing stock price of $35.98, which was last Friday. $2.69 per share is yielding 7.5%. Nice return. Tip ranks, what do they say about Enbridge? They rank it an outperform with a 10, and the average analyst stock price here is 43. The lowest one's 40. Now, as I said on Friday, it closed at like 35 bucks. So just based on the Friday close alone, there's a $5 uptick in the price there. So we have 8 analysts here, and 5 are saying it's a buy, and 3 are saying it's a hold. I'm edging closer to the sort of left side of this equation, for sure not sell. I am holding Enbridge, quite a large position, and I'm adding as well. So I'd probably say, yeah, I think it's a buy as well. Energy Transfer, so 2 more. Second last one here, Energy Transfer. This is a great buy. It's $11.50, super cheap. This company, Energy Transfer, doesn't only deal in the pipelines and natural gas that they ship and refine and all that kind of stuff, but they also own Sunoco, which is, I think, about 3,000 gas stations as retail in the United States. So Energy Transfer, very diversified energy company, even though, sort of by definition, it's predominantly a pipeline company. Cheap, earnings price equity ratio of 9.19, so below 10, and I'm looking to be sort of below 15 as an entry. It's 52-week high. It's just sort of $1 above where it closed on Friday. But this one is one, if you buy it, you can just hold it. You'll be okay. And then ETF. So this particular ETF, I have built a position over the last 6 months or so as the energy price pulled back from around $120 a barrel. I'm talking about WTI to about, sort of $86 a barrel or thereabouts. I've been reinvesting some profit and putting some money and just parking it into XLE, which, by the way, has been a good trade for me because I buy it, I hold it long, and it's been doing quite well. Why do I buy it? So firstly, on the right-hand side of the screen here, you can see what I'm actually buying because almost 40% of XLE is Exxon and Chevron. And then you have 1, 2, 3, 4, 5 stocks here at around 4.5%, which includes beautiful, wonderful companies like ConocoPhillips, EOG Resources, Pioneer, Slumber. You can just buy these companies, or otherwise you could just buy XLE. You can see it has almost 4% of Occidental, Valero, Devon Energy, another favorite. It's a good stock to own. How much does it cost me to buy this ETF? 0.1%. Does it pay a dividend? Oh, yes. $3.65 at this current stock price of $80 is yielding approximately 4.5. So this is good stuff. If you don't know where to park your money, you just put it into XLE. And this is an important point as well, because what you can say is if there's too much risk in buying a single stock, right? So for instance, if you think of it just from a personal point of view, if you buy Occidental at $77 and then it pulls back down all the way to $57, you feel awful. This is not good at all. But it might be Occidental specific, right? And that's why I make reference to the comment of single stock risk. Whereas if you buy XLE, you're buying a little bit of Exxon, a little bit of Chevron, a little bit of ConocoPhillips, EOG Resources, etc. So if you're nervous because you haven't done your due diligence the way you should, and you're not sure exactly which energy stock it is that you should be buying, you can park money in XLE. Now, right now, still, after about 18 months or so, energy is still the top performing sector of all the sectors that make up the equity market. It's not going to last forever, but that's how it is right now. So if you don't know what to buy and you need to park some of your cash awaiting investment in an energy stock, and you cannot pick or are afraid from a risk mitigation point of view to pick one particular stock, then what you can do is park some money in XLE and just hold it, and you should be okay. So guys, this is part 1. This is my 5 largest energy equity positions, and you're familiar with them by now, and I'm giving you some guidelines as to why I invest in some of these stocks and whatnot. A quick note to end with here on Petrobras. So in the Brazilian election, which was at the end of early October, there wasn't a conclusive winner, so there has to be a runoff. And the runoff will be at the end of October between Bolsonaro and Lula. And you can't predict these things, especially not today, especially with all the political interference and stuff going on. But at the end of the day, a runoff election of this nature always favors the incumbent. So there's a really good chance that Bolsonaro might win re-election in Brazil at the end of this month. That's a risk factor for Petrobras. So right now is probably not a good time to open or initiate a new position in Petrobras. Put the money in XLE instead until you get some daylight on that particular stock. With Occidental, I don't know what Berkshire Hathaway's ultimate plan is with Occidental. They may want to take up over the whole company. I don't know. Nobody knows. I think, I shouldn't say nobody knows because I'm sure Warren Buffett knows what he wants to do. But that's a different kind of risk mitigation strategy that you may want to deploy there or employ there or not, right? Because if Warren Buffett makes a bid for the company, it's currently trading at $60-something. He might say, my initial offer is $75 or $80 a share. And then everybody says no. And then he says, okay, I'll buy it for 90. So it might force an exit, which is a good story. Enbridge, looking better than before. And Energy Transfer is one that I like and have liked now for about 18 months as I've been building my position in Energy Transfer. That's my top 5 energy stocks, guys. Let me know what you think. Let me know if you're in the same positions. And hey, if you have any questions, I'll be happy to answer. And I'll try my best to answer every single question. On that note, this is Rudy signing off. I'll be back with part 2 very shortly. Bye-bye.